Good afternoon, traders and investors. Welcome to PreMarketPrep.com, the closing print. We could be in for a doozy of a closing print here. Let's run down the action in the commodities and the futures and some hot stocks and some stocks that are not so hot. It's been a choppy day, but the bottom line is during the regular session, we made a couple challenges at the closing price of 75 and a half, made it off early off the opening bell, failed, came down to make a new low for the move, 43 even versus 47.50. And once again, the bulls went to work, took it back up near that closing price. But once again, an afternoon lull just kind of took us back towards the lows of the session. Currently, we're down 23 and three quarters handles at 39.51.75. Not much here, folks. Below that intraday low of 39.43. Not much on the charts to a level that was mentioned pre-market prep plus that January 20th low of 39.1175. But see if the bulls can mount a rally here in the last 29 minutes of the session. The buck, a lot of days when the buck is weak, it's good for the market. Not one of those days. Given some back of the gains over the last couple weeks here in the dollar, a breach of yesterday's low in the dollar index really didn't lead to much as rebounded quickly above it, but still move up off the low, some consolidation here. In the dollar, bonds fell out of bed here, not liking the future course of interest rates. Now down over a point here, a point and a quarter. Down at 124, making a new low for the move, matches that low that we had back in November. And then you can see that big up days if we can find support somewhere in this handle, this bar. Crude making a run at yesterday's high exactly. 77.83 was your high from yesterday. Current high 77.85, and market starting to show a little strength here in a bid. We won't get too excited as we will have another high to clear at, this is 78.50, excuse me. No, 79.76 comes in as your next high. So three highs kind of in the same area, trying to break into 78 handle. Things open up a little bit for the crude oil futures. Moving on to the, crude is up 76 cents. If I didn't mention, it's 77.81. Gold in the green by 820 at 1844.90, approaching a pair of highs that you had last week at 1855 and 1856.40. Actually, you had about four highs at that 1855 area. So we'll keep an eye on that if you're looking for gold to get back into the that 1900 handle. Ways to go to do that. Silver, kind of a quiet day here, a little over a 30-cent range, but it's back above 21, up just a couple pennies here at 21.09. And Bitcoin futures, they're up $125, 23,535. Boy, let's run down a couple stocks here from today. And boy, oh boy, some we did okay on, and some we were not. I don't know about Triple V, but this First Solar took out the pre-market high, never looked back here. This is just an incredible move for First Solar. Thought that maybe the pre-market action was overdone, but the bulls were looking to buy something, and this was what they were buying. We'll take a look at the pre-market action also. Let's see what this is doing for the TAN ETF, which is just a big component. That's having a very good day. We can look at some of the other solar stocks, SEDG. I believe I saw catching a nice bid off this. This is relatively close to old-time highs. And then Sun is one of your smaller. No, that's Sunoco. What am I thinking? I'm thinking Sun Run here. Participating in the rally up over 1%, but not nearly like the other stocks. Your disaster of the day here, Rivian. Street is abandoning this off that poor report. We talked about the 15 handle, and we are there. All-time low in Rivian, 1528. Your low in today's session, 1556, only 6 cents above that, heading into the close. So Rivian not faring well. I saw GM seemed to have some layoffs, but that's trying to find support just above the low from the gap up off earnings. So this will be a key level to hold to keep the post earnings rally alive. That's 38.33. Came down there a couple times, so trying to find support, and it looks like we're doing okay on that one. What else do we have to look at here? Oh boy, let's just look at the quick retail here before we bring in Mr. Christian Fromhertz from Tribeca Trade Group. Target the day after, Target giving it back here, hung in there okay yesterday, actually ended up showing a little bit of a gain, but on a light volume day here so far, Target getting whooped. Coles is, I'm going to equate this to, you know how I said coin was like the most volatile $60 stock? I'm going to put Coles in as like the most volatile 30, just under $30 stock. $3 range on this one. Got above yesterday's high, sucked a lot of people in. Took out the low 26.38 from the nope, never did get to the pre-market low. So a green bar 23 cents. We'll see how the street digests this report. Afterwards, I was a little worried about the lows that I own just because of the reaction to the Home Depot earnings. This opened up 20 cents from the high of the session, never went green, now sub 200 lows in a world of hurt. Home Depot still making a new low for the move. The consumer not flocking to the stores. And what else? The bright spot for the retail here, Dollar Tree. Looks like the pre-market traders got this one wrong. Never came near the pre-market low. In fact, I was talking about the buyers stepping up at the 140 area. They actually stepped up 4 pennies above the previous day's low, 143.04. They hit 143 up to 152.82. So someone found something positive about the report. NVAX, I saw someone says their headquarters is in a strip mall, 243. We just couldn't find any buying interest in that stock today. So there's a wrap up of some of the things that we covered. Lastly, Tesla. I know some people were looking for the big run here. Spent a little time over the close of 0571. Came out well, that peaked well ahead of the high from yesterday at 1123. So Tesla, big move up in January, didn't get much back in February, trying to consolidate for another move higher. I'm going to stop the screen share here and bring on Christian Fromhertz. And here he is. He is the CEO and founder of Tribeca Trade Group. He wants to talk to us about a lot of stocks, but Christian, I guess it's not a great start to the month, but as we head in here into the final 20 minutes, I mean, not a horrible one either.
Mr. Spoos, what's going on? How are you?
I'm doing good. Someone sent out a tweet about, we took out that low of the move, right? And yeah, there's nothing there. And I think if it's anything that we've seen about this market so far is that it just doesn't go straight to the level you want it to go to. It comes all the way back to unchanged. So you got to be willing to take a shot, to take your trade. Doesn't work, reapply it and get to it. Now we're just kind of hanging out near the lows of the session. But one thing you're good at, Christian, is you're always good at identifying pockets of strength and potential buys. You got that in you. So I guess the first thing that you wanted to discuss here with the bonds down over a point here, making a new low for the recent slide. We're still talking about a quarter point here at the next meeting. What are you seeing on the interest rate front?
Yeah, I mean, I think that's the what's really kind of going around. If you open up Twitter, probably you're somewhere in your flow, somebody's talking about interest rates or opening up a Treasury Direct account. And, I don't know, maybe they're going to come out with a SPAC Treasury Direct or something. I don't know, but they're very popular right now. A lot of talk about how much you can get in a money market account and so forth. So, yeah, I mean, I think, if you put a side by side chart up right now with what bonds are doing, as soon as these things like, bounce a little bit, the market kind of comes back. I mean, if you bring up, either TLT or the long bond futures, this had a relief bounce, and equities followed that bounce this afternoon. So it's kind of, to me, it's a bit depressing when, it's just a really tough market to see, for equities just to follow what interest rates are doing step by step. But this is what happens, and we saw this in 2000, last year, 2022, quite a bit. And it's not to say that this is always the relationship that equities are going to follow this, but when the volatility is high like this in bonds, it just kind of steals the show. So that's, I think, number one for me. That's the thing that I'm watching. And you're right. I mean, it's not the best start for the first of the month, but yeah, I do like to kind of pay attention to the tape a little bit. I've got a couple other names too to kind of go over with you if you like.
Sure.
But
Go ahead.
I
You
do
want to
have.
take over the screen there?
Oh yeah, I could do that. Hold on. So yeah, hold on one second.
Okay.
Let me just share the screen.
Supposed trying to mount a little bid here.
A little bit, right?
Yeah, a little bit of a bid. Watch it go back to unchanged on us, just to mess up my daily wrap. But what do you got for us?
Yeah, exactly. That's how this market is keeping you on your toes. Whatever you're going to talk about, it will change. But this is PBF. This is one of those energy names that it had good earnings, and there's a few of those energy names, of course, that had good earnings. Maybe more than a little than a few, but seeing a lot of option activity today. So this, and along with Valero, and again, like sometimes that's what option flow sometimes can really kind of lead you to some areas of strength. Even though, like, I wasn't looking at energy, like I thought energy was kind of weak yesterday, but you could see there's about 1,600 of these June 40 calls, which is decent size, even though it's only 1,600 contracts. This one order that came in was for about 400,000. So that's interesting. And then Valero too is another one that's getting hit with some option activity too. I mean, these names are having a nice day. This is things up like 5.9%. So it's tough when the other thing that I kind of have difficulty with, because these two names like weren't on my radar for today. Sorry, Thinkorswim's a little caught up here. And you look and it's like, oh geez, these things are up 6%. So you guys talk about this a lot on your show, that has chasing worked on a big green candle?
More times than not, it hasn't, and can prove that. The proof is in the pudding on that one.
Right. So like scaling in, like I scaled into one of these. I just bought a little bit of this PBF, but you get burned on, if you're not prepared to say, okay, this name's up 6-7%. If you're not prepared to add, more tomorrow, like on an inside day, which would probably be a better signal, then odds are you have a good chance of getting hurt in this market. So you really have to exercise, some risk discipline, not just with like planning out your trades, but just be careful chasing green.
Okay. All right. Look at the energy sector, crude picking up a bit. Been in somewhat of a trading range here, but always good to keep an eye on the crude oil futures. They're actually bunching up right near an area of a couple highs, so showing some strength. And then that looks like that's transforming into some of the energy stocks. We'll just take a quick look, a little different type of energy stock, but CVX here. Finding support in the same area. That chart's not looking too bad, the 160 area. And then I'll just go to ExxonMobil. Ooh, we got a level on ExxonMobil here. Well, let's just call it that. Well, today's high 111.86. There was a couple highs at the 112 area, so gets through there. What else you looking at? Are you looking at
Well,
any of these crazy biotechs or not?
no,
Either am I.
they just kind of got too difficult for me. XBI for a while, I was into it. And it kind of, I mean, it's actually not a bad spot. I guess in this market, it's been better at like buying close to the trend line versus like extended away from the trend line. But this is the XBI ETF. This is the one that I use because it's equally weighted. So the smaller names are the same, get the same representation as the larger names. I mean, that's not a bad place. You could see it's right on that trend line. Last time that this worked, when it kind of dipped into this. So, you could set yourself up here with like a stop just maybe a couple bucks away. And that's not a bad place to kind of maybe start a trade and think about a move for about like $4 or $5. That's what I would kind of think with this. But and I what's interesting too, Joel, is this is like such a big outperformance versus healthcare. Look at healthcare.
Oh,
Does
did it stop going down yet? Or not?
And I see 125 coming into the picture. That's a red line that I've got drawn down there, which is done automatically on the indicator that I use. So here's where like I think this market is such a head scratcher. Last year, when the market had some volatility and when rates were going higher last year, we bring up the chart of TLT, what was outperforming, were the defensives, and things like XLV. And, again, this market keeping you on your toes because it's just not the case. And here's what I'm referring to, I guess, is just this move that we saw basically September, October, when the market was kind of, when this was outperforming the overall market. But man, that's such a move down and, really unloved. And, sometimes how these sectors work too is, everybody thinks that this was going to turn the corner in here. And it almost did, and then people then kind of forget about these sectors, and they get they see kind of what has happened here, which is a sell-off in healthcare, and then maybe once everybody takes it away from their screen, then maybe it can rebound once it gets to like
Look at have you seen this Johnson and Johnson lately? I mean, it seems like this thing goes down almost every day.
Oh my God, no, I haven't been watching it. Wow.
I have it 1, 2, 3, 4, 5, 6, 7-day losing streak here in Johnson and Johnson.
So that's my question for you, Joel. If we're supposed to be headed into a recession, isn't like Johnson and Johnson supposed to be going up?
It is. I mean, it's funny, right? But also, I mean, you had Einhorn today talking, value stocks, dead. I mean, one thing you still gotta, keep in mind is as much as this market is, come in, we're still kind of trading, at a historically higher, valuation. And and the other thing that is just keeping me, tempering, any kind of bull enthusiasm. I like to look at things on a weekly basis, and the market hasn't given me much indication to be positive this week. It's just that, the weight, and this is just for the S&Ps, it's so tech centric that when you have, as long as Apple, Microsoft, right. Google, and Amazon, as long as those guys are going to be there as your top 4 components, I mean, they're just whatever the other 496 stocks do, it really doesn't make it it almost like it really doesn't matter. So I'm looking for stabilization.
I have something that's going to maybe get you bullish. I don't know. Maybe I could turn the corner and get Mr. Spoo's bullish.
Okay.
All right. So this is an ETF that I'm sure that you've never heard of unless you read my article. But I've been talking about this one for the last couple of weeks. And again, like it's not going to catch too many eyeballs because nobody's ever heard of this ETF before, and it's got a horrible name. And here's what I would name this ETF. So notice this thing is breaking out to highs, right? It is. So what do they call this thing? The description doesn't even, you can't even see what it is because they're using so many words in here. I would fire the marketer, first of all. I would hire the person who put together this basket of stocks, but I would fire the marketer for this name. I think it's called like the I can't even, I own it and I can't even remember what it is.
The First Trust RBA American Industries.
American Industrial Renaissance ETF. What I would have called it is the nuts and bolts ETF, because if you go through the components of this, it's things like, it's a lot of these really small industrial names, and like this is where you've got the strength in this market. It's in things like, you know, Wire, Comfort Systems, ATKR, which I got long yesterday, Mueller Water, Bueller Water, Hubble, right?
That's what was that movie? Risky Business. Yeah. Oh, Ferris Bueller.
That's another good one, but
yep. Okay. Yeah.
Look at these are probably some of your most boring stocks that you could, like, you know, half of these things. I mean, there's a couple interesting ones in here. Shoals, which Arrays in here. So there's a couple solar names in here too. But if this doesn't, like, that's why I call it the nuts and bolts ETF, AIRR. And here's, so when you look at so thank you very much for the intro talking about relative strength. But this is one of the funniest things that you're going to see. When you put this ETF, if I have it here, versus SPY, right? So you look at the comparison, one in the numerator, one in the denominator. Look at the outperformance of this versus SPY. This is the 1-year chart, and this is the 5-year chart. So again, like, I'm not saying, you know, go out and buy this now because it's pretty darn extended away from the SPY ETF, but you can, you know, with any ETF, what I try to do is I say, okay, this thing's at, you know, very close to all-time, or it's breaking out to all-time highs. What are the names that are driving it? And you know, you can kind of find some trade ideas. And that's what I did with ATKR, which was on my radar for another reason. It had strong earnings. It's not, kind of wanted to see it break out to new highs today, but it's not doing
close.
Yep.
Yeah,
close.
Yeah, for the nuts and bolts of the economy, I like to look at Fastenal.
Yeah, exactly. That's a perfect name.
Yep.
It's not doing bad. Right. And then the other one too, which this is a better marketer, because this is the PAVE ETF. This is the infrastructure ETF. Not breaking out, but again, just looks much better than the SPY chart, right?
Yeah, I think I'm in this one. That I don't know how long or where I got in it. The tolls one, the Brookfield infrastructure.
Okay.
Yeah, you know, same thing here. But okay, well, kept you a few minutes, you know, past here.
Well, it's fun talking with you. So we talk stocks. We do it more than 10 minutes. Stocks.
Any you know, just any closing thoughts here? I mean, if you want one positive thing out of me is that, you know, and it's close enough for me with last week's low being 47.50 and then today's low 43 even, 4 handles. Well, maybe I'm cutting corners. Maybe there's a double bottom in there. It's just the way we're closing, you know, just off those lows gives me a little bit, you know, that's the most positive thing I can say about the market. And we got your positive input. So that's great. Thanks for joining us. I know that the first Monday was messed up because of, or one of our Mondays was messed up because of President's Day. And then I was out on Monday, but we got a treat for you here on Wednesday. And
first of the month.
Yeah, we'll get you back next Monday. So March in like a bear so far.
Oh,
Christian.
boy.
Yeah. Yeah. So
we'll see how it materializes as we go through.
Okay. All right. Thank you. Talk to you again soon. Christian
Thanks so much,
Fromhertz founder and CIO of Tribeca Trade Group, breaking down an interesting sector that we don't cover a lot. Let's see here. We do have some stocks coming up with earnings after the close. Those are always fun to give you some levels, some outrageous levels. Where when these algorithms get going. CRM, boy oh boy, it got had a great January, pulled back here in February. Whew, boy, trying to get back half of that decline from the recent February high, peaked right on February 1. Let's call it 179 to 160. I just call it this 170 area here. I'd keep an eye out, not too far away. Multiple highs, just called 170, 150. Potential resistance here. Coming back on the downside, I'm going to ignore this low here. But I think under 160, you start to get some action to the downside. But you guys don't want to see me; you want to see my charts. So I'm putting my charts up here. That's a look at CRM. Also, after the close here, back up. Let me scroll back up here to see what we have. Acta, growth stock. We will see. Ooh, quiet here. Buyers really stepping up at 70, 71, just under that. So I look for there. If you get a dip below it, come back above it, and kind of been tight on the upside here. Not willing to rebound from that February high, 82.10 down to 70. So this 75, 76 area, no daily highs to support that. But that would be getting back half of the move. So that's a quick technical look. Splunk, a stock we haven't talked about in a long time. SPLK. Once again, same kind of looking chart. Oh, a lot of highs there. 110. That was also a gap fill from late August. So if you're looking for resistance or potential breakout, we'll be looking at the 110 area, SPLK. Also, I believe we have snow reporting, and that's kind of been on a little bit of just a holding pattern here after peeling off back off the February high. For this, let's see what happens if you get a pop here. If it can punch through this 160, looks like you got a gap fill here at 163.92. I see people. What else? Is there any other earnings stocks that I want to cover? I think there's one more here. VEEV, Viva Systems. Wow. 4 days. Like, look at this. Almost 4 matching range days. Go on the lower end of those 4 lows, 164. The higher end of those highs is 168.5. So we'll see if the earnings take it out of that trading area for Viva Systems, VEEV. Everyone's talking about BGS here. I didn't really see the move. BGS. That is B&G Foods, a food stock that hasn't participated in the food rally, gets a boost today. A gap and go, finishing. Looks like we're going to finish just off the highs of the session, 1657. Got to just throw a little bit of caution in here. If you're looking for a breakout, it's just because this is where we stalled in November, just a little bit above that. So we'll be keeping an eye on the 1650 area. That was also some highs back in October. But you get to that 1650 area. Certainly some more room on the upside. Let's take a look. Always the day after. I like to look at stock the day after earnings, and those good earnings are not being rewarded for Zoom here. Don't know if you had any analyst actions yesterday. Barely ended up green yesterday, and then today got through the close, but never could really get near yesterday's high. And then the momentum traders turned on this in a heartbeat. Maybe the good earnings will lead to a gap fill here at 69.36. I bet you got there today, right? 69.35. So an exact gap fill. If you're leaning on this area, you gotta really give it to under $66. 66.06 was your low on January 25th, folks. Well, We had no real fireworks like we did in the final minute of Wednesday's session when the S&P lost 10, 12 handles here. It looks like we're grinding here to get a closing print right around here. 39.56 is what I'm seeing here now. Bidders a little bit coming in off the lows. Looks like the last print a little bit higher, maybe 39.57 and a half. So down, but not out for the market here on this first day of March. What we do have to note is we did make a lower high on the session. We're below our weekly numbers. Also, what we have to note is we did make a lower low from that low on Friday of last week. And then going back to the S&Ps here, this is our lowest close of the recent decline. You can see on the dailies, not much support until you get into the lower 3,900 handle. 39.0175, January 19th high, 39.1175, your January 20th high. Thanks for joining me here on the closing print. Everyone enjoy the fireworks with earnings coming up here. And we'll be back tomorrow. And I know you guys are going to have some questions for our guest. That's going to be Mark Chaikin of Chaikin Analytics. All right, everyone, have a good night. Back with you tomorrow.